Okay, folks, welcome to the Contrarian Report. I have a lot to get to this week. I want to first do an analysis of REGN, that short trade. Then I want to go into the stocks we covered last week, stocks being SBS, Companhia de Saneamento. I know I said that wrong, but give me a pass on that. Synnex, US Home Systems, of which we are now short. EchoStar Holdings, SATS, SATS, the symbol. Cobalt International, CIE, the symbol. PAA, Plains All American Pipe. Holly Energy Partners, HEP. Willis Group Holdings Public Limited, that's symbol WSH. Seagate Technologies, symbol STX. New stocks this week are Almost Family, AFAM, for longtime members and longtime visitors to the site. You know that we've traded this one several times in the past. This was an IBD, Investors Business Daily darling, at one point in time. Rex American Resources, this is an extreme overbought stock. Crown Castle Inc., extreme overbought stock. Dynamic Research Corp. This is a stock that's approaching. It just barely made it onto our screens. Extreme oversold. Lastly is Neurometrics. That's NURO, the symbol. This is a penny stock. And there's a story behind this one that had some dilution, but I'll get into that in a moment. So let's begin with my analysis on REGN. You remember last week that I had mentioned that on the previous Friday here, where the stock broke down, we were short of the stock. We didn't have a complete position built yet. The stock had closed just below the lower band of the rising uptrend line after it had put in a topping tail that Thursday. After the market closed on Friday, think about it. On a Friday afternoon after the market closes, as sneaky can you be, the management comes out and announces that they're going to be moving earnings, which they knew were going to be good, up until the next Monday, giving the opportunity for shorts to get out of their positions. Zero chance. I didn't even look at the aftermarket spread, but I'm sure after that press release came out, the spread between the bid and the ask was probably about a buck or two apart, and there was no way that I was going to get out of that position. So, management comes out, they move earnings up. You have, after earnings are announced in the morning, of course, you have the banks come out and upgrade the stock price. You have 130, 140 from Bank of America. Piper, they raised their target. So it was just a massive skull effing for the shorts. So the question becomes, how do you survive this? How do you survive the short squeeze? And that's the purpose of this conversation. Now, you can panic, and you could have gotten out here, which many, many shorts did. But you need to go back and remember why. Why did I get short of the stock? It's because the technicals were so extreme overbought that the risk to reward was in our favor. This spike higher to me, although I wasn't pleased with it, only told me that the risk to reward with an RSI that hit 91 was only even more so on my side, and my worst enemy at that time was not management. They did what they thought was right. Kudos to them. They squeezed the shorts. They had a 14% short interest in the stock, and they burnt them. My biggest concern, or the biggest threat, were my fellow shorts. My second concern was my own psychological behavior. Would I remember to remain cognizant, disciplined, and come up with this game plan for how to survive it? I had a game plan that Friday or that Saturday, which I sent out to members on how we were going to deal with this, and sure enough, it played out perfectly. By the following taping, we had already broken down some, and we had made up for a large piece of our losses in the stock. But how were we able to survive the squeeze? We survived the squeeze, as I mentioned, by remembering why we got into the stock in the first place. And we embraced the fact that the stock was spiked higher. We identified what management had done. The banks were complicit. Secondly. Thirdly, you won't see it on Yahoo Finance as a headline, but my news feed on Thinkorswim was showing that you had insiders that were dumping shares. Thirdly, you needed to watch your charts. This is a 15-minute chart. And you could see, as we broke down, the stock respected the new upper band of the downtrend line. We got out of REGN. We made a slight profit on the common. However, I did have a small position in the 95 puts, which we took a small loss on. So net, we made a small profit on it. Now think about it. We were short from here. Because we kept our discipline, we still were able to make a profit on the trade. That is the key. If we were on margin, we would have had to have been forced out of this trade. We kept our capital reserves. Our capital reserves gave us the ability to add to this position at a time of our choosing. In the end, we didn't add to the position. We were able to make a profit even without adding to the position. So we kept ourselves off of margin, because the moment that you get into a situation like this short squeeze, and you're on margin, you have a senior partner in that trade, and it's called your broker. They can liquidate that position anytime they want unless you pump more capital into your account. Because we built a short position in small increments and we kept cash in our capital reserves, we weren't on margin. We were in control of the trade. We understood what was going on here. We kept to our discipline, and we watched the stock deteriorate rapidly. So a negative trade turned into a positive trade, and a great lesson to be learned by all. REGN should go into the textbooks on how a contrarian should trade a stock. Let's move on. If anybody has any questions on this, please shoot me an email because it's so important. Let's move on to SBS. This is one that I featured last week. We did not get the breakdown that we anticipated. We did not enter the stock. We did not get the signal. I do believe that this consolidation here is the worst thing that could possibly happen if you are short of a stock and you're trying to bet that the extreme overbought condition is going to lead to a breakdown. It didn't happen. The stock traded sideways on Friday afternoon. Were I short due to this topping tail here at 75.75, I would have closed the position because I would have been concerned about a spike on Monday morning. And I wouldn't be a bit surprised. This stock here had an RSI in the high 80s. It is now down to 75. It is no longer an extreme overbought stock. I'm keeping an eye on it because I'm betting that the stock is probably going to head higher. What was last weekend an extreme overbought stock is now, this weekend, a buy because it consolidated sideways. Check out the volume. Volume to the upside declined, which is okay. It consolidated. Now, if you get a breakout above 75.75, it's a long. It'll probably head back up into the 80s on the RSI. Synnex. This is another one that I had featured last week. We did get a pullback, but as soon as you saw this bottoming tail here, you needed to get out. That's your signal. Get out. The stock wants to head higher. RSI is 84.67. This stock could still go higher, so we want to watch and wait and possibly look to open up a short position. USHS. We are short of USHS. We were short. We enjoyed this ride down here. Topping tail on Friday. If you are not short of this stock, I would not suggest that you do get short. The trade is over. The risk to reward is no longer on your side. What you should be doing now, if you are short, is using your 15-minute chart with a declining downtrend line, the upper band watching it with a stop loss just above that upper band of the downtrend line. And I'll be going into that with members tonight on how to preserve your profits. How do we know to get short of USHS? Well, this is what I go into with members after I go into it with the free blog version of my analysis of these stocks. We go into further detail. I break out the short interest in the stock. We review that. More importantly, is that we look at historical resistance, and we identified $11.75, $12 being historical resistance. What was the high last week? $13.20. So we were in a good range. It respected that range, and it closed below that resistance level at 12.06. So we know that the historical resistance of the stock, we knew it was safe to begin shorting in that area, and it's a great trade. We're still short of it. I'm not looking to get further short of it. We just want to preserve our profits at this point and maximize the trade. SATS, EchoStar Holdings, another one I featured last week. This had a nice move down. Great bottoming tail here. If you took profits, good for you. Looks like we may come back down and retest this stock. The risk to reward is no longer on your side. I would not trade this stock short. If you have a short position in it, good for you. Just make sure you maintain a trailing stop loss order. Preserve your profits. Again, how do we know that where historical resistance was? Well, we used, in this case, a monthly chart. You had bottoming tails back here in May, June of 2011, and we knew that when you have these bottoming tails, what was previous support now becomes previous current resistance, and sure enough, it hit 32 and backed right off. You need to watch these charts, and this is what I go into with members. This is a far deeper analysis than what you see on the blog. So you need to become a member. 14-day free trial. Please sign up for it. CIE, Cobalt International Energy, another great stock that I featured last week as a short. Great pullback here. And I always mention this. You want to see whether or not the stock can rally and punch through its previous highs of 36.51. I'm currently doing this with Apple. And I want to see whether or not the stock can break out above previous highs, or will it fail and break down? In this case with CIE, it broke down. In this case here, we went to the weekly chart. We knew that there was no true previous historic highs. So this is all what I call blue skies. There is no overhead supplies, no previous holders looking to get out. That means the stock can go a lot higher than you might think, because there's no overhead resistance. So you need to be very, very careful. What I like to do is I like to draw an uptrend channel. And this spike higher and this pullback is what drew me to the stock in the first place. And we wanted to see whether or not it could break out above that previous high, and it failed to do so. So really nice call, I believe, on our part with this one. I know several members that got involved with this one. Congrats on your trade. Now just maintain those profits. PAA is another one I featured last week. This stock here is not a short just yet. Look at this bottoming tail here. Although you had a pullback, you see these bottoming tails here at 80. The stock told you, the market was telling you, get out. If you had profits, get out of your short trade. The stock is going to go higher. And more than likely, we're going to break out, head higher above the 82.39 level. RSI is no longer at extreme overbought levels, which is just 80. Remember, these books that you read, Technical Analysis for Dummies, say short a stock above 70, which is ridiculous. You buy a stock above 70, especially when you have fundamentals like Plains All American Pipes. So this stock is a monster. So you don't short a stock with monster fundamentals just because it goes above 70. You buy it. That's a sign of strength. Shorts are covering, and the stock can go much higher, as we saw here. Think about it. If you listen to these dummies that put these books together, you would have shorted Plains All American Pipe here when the stock went above 70 and it rallied all this way. You would have been burnt. If you were on margin, your broker would have taken you out of that trade if you didn't pump more money into that account. So let's avoid that at all costs. Let's move on to the stocks that we're looking to trade in the coming week. These are the new stocks that we're adding. AFAM. Again, this was an IBD, Investors Business Daily, top pick many, many months ago. And we shorted it and we made a nice profit. Now it's back. Now the key to remember here, and I'm going to go into this in further detail, is that these early risers out of these bases, remember this is in a downtrend channel. A lot of shorts in here that were making their money. Too greedy they got, They got it at the last minute. They're expecting the stock to fall back down. It's not going to happen. It's not going to go back down to 13 unless they come out with an SEC report charging a non-compliance, or you have the CFO that resigns tomorrow. It's not going to happen. The stock is trading above all major moving averages. You need to be very, very careful with this stock. I'm going to be going into the historical data that I mentioned with the previous stock on weekly or monthly charts. In this case, probably going to be weekly charts, identifying previous resistance or previous support where we can add entry points where the risk to reward is in our favor. We want to take a look at where short interest is. And why does that matter on stocks that we're looking to short? Well, join the 14-day free trial offer, and I'll go into that with you in detail. It's very critical, very critical. REX, American Resources. This is another one. Look at this chart. Absolutely beautiful. They ought to have a picture of this in the dictionary for a stunning chart. Beautiful uptrend channel. But I'm seeing reasons why you need to start looking for this stock to get short of. But again, before we do that, we just don't take a look at a daily chart and say, it looks good, let's get short here. No, never. We want to take a look at monthly, weekly charts to identify previous resistance. Where is our best risk to reward entry point? That's where we want to begin to start adding to trades in increments. Not all at once. No, we're not cowboys here. So REX is one of our future trades, hopefully. Crown Castle International. Beautiful chart here. It closed above resistance. This might have a little bit more upside. But again, we want to take a look at historical resistance. Where might we have the best risk to reward to get involved with the stock? I know it's redundant. I know I'm repeating myself, but I do it for a reason, because it instills discipline. This is not a game for geniuses. It's a simple formula that I have. And I repeat it because I need people to learn the lessons that if you learn them quickly, you'll avoid catastrophic results. If you build a position in increments, you avoid what we endured during REGN. That trade, which I mentioned at the outset of this commentary. You need to pay attention to the certain rules that I have. And please join the 14-day free trial offer, and I'll be more than happy to walk you through these trades. Take advantage of Trade Coach, which is basically you get my one-to-one opinion on how to trade these stocks. So Crown Castle International looking really, really good. Dynamic Research Corp, this is an extreme oversold stock, but not quite yet. It's nice, but it hasn't met my criteria yet. I like to see it break down further. Ideally come back down and test the 775 level. We may not get there, but we'll keep an eye on it. RSI is at what, 1987? It can get a lot lower than that, folks. So it doesn't encourage me at all that it's just below 20. This just barely makes my criteria as an oversold stock. This is a penny stock, which they're fun sometimes. Neurometrics. Good stoke action. Again, we need to go back down and take a look at where historical support is. And really, that doesn't matter all that much due to the fact that the reason why this stock is taking such a beating is that they came out and they issued more shares, thereby diluting the shares. If you weren't a current holder of the stock, it really doesn't matter to you that much because your shares weren't diluted. However, the stock did bring in a heck of a lot of capital to carry them through for the next 2 to 3 years. So if you're new to this stock, it's good for you because they priced the new offering at $1 a share. It's now trading at a discount to that offering. So it's a great opportunity here. So we're going to go in. We're going to take a look at the short interest. Do we have a good opportunity here to get long and take advantage of a short covering rally? We'll take a look at it. We'll take a look at the historical support levels as well. So again, folks, please, if you want to trade these stocks, you're interested in having a one-to-one discussion on how to trade these stocks or a stock that you're looking at, be more than happy to do it. Sign up for the 14-day free trial offer. If you're watching this on YouTube, please subscribe to my channel. If you're watching this on my homepage, I'd ask that you just sign up for the Contrarian Report. Just enter your email address. And for those who are on Twitter, I'll post Twitter feeds every once in a while. So please sign up for my Twitter page as well. And I will talk to you soon. Have a great trading week, folks. And remember, maintain your discipline. If you have any questions, shoot me an email. Have a great week, folks. Enjoy the remainder of your Sunday. Bye-bye.